Recently, John Bollinger's market timing system generated two rare buy signals, one on November 21st and one on November 23rd. These buy signals are worth another look, as the last buy signals generated by this system occurred at the January 2018 lows. Will these signals mark the lows in this cycle as well? Let's take a look. This information is based on an article written by John Bollinger. And John Bollinger is the president and founder of Bollinger Capital Management, an investment management company that provides technically driven money management services. He is best known for his Bollinger Bands, which he developed in the early 1980s. Traders and investors worldwide use Bollinger Bands to assess expected price action in the financial markets, and the bands are featured on most financial charting software and websites. And according to the article, it's worth taking a closer look at the trading system that generated these two recent signals. When Bollinger began his career in technical analysis, there was a popular market timing system that employed the Dow Jones Industrial Average, a set of trading bands, and two market breadth oscillators. At the end of the day, the closes of each of the 30 stocks were averaged to get the closing value for the Dow. The same was done with the opening prices to get the open of the Dow. Around 1982, the real-time calculation that we use today began, and the highest and lowest intraday calculated values became the official high and low of the average. This resulted in a narrower range for the Dow from that time forward. And that system worked well for many years, but in the 1980s, it gradually became less effective and was eventually forgotten. Over the years, though, Bollinger kept that market timing system in mind as a sort of template. He developed a modernized version of that classic system using the theoretical Dow. Now, the theoretical Dow is a detail that we won't get into now, and so just consider it the Dow. In addition to the Dow or the theoretical Dow, the classic system included a 21-day moving average, 4% trading bands, and intraday intensity calculated using, again, the theoretical Dow. And that is this chart that you see here in front of you. And as you can see here at this point in late January, it signaled a bottom in the market. And again here recently in late November on two occasions, it again is signaling a low in the Dow. So could the correction be over? And could we be improving and on our way up? Let's take a look at our charts. Now, this is the 2-year weekly chart on the Dow, or the Spider's Dow. It's the ETF, and the symbol is DIA. And for disclosure purposes, I do not own any shares of DIA. Now, I don't use Bollinger Bands. To me, it's a little bit early in a lot of the indications, and I like to be a little bit later, a little bit slower. So looking at the chart here, and you can see the Bollinger Band here in the green, and I've done the best I can to replicate the formula given in the article, but I'm not able to do that exactly, and this is as good as I can get. But here is the first indication that is indicated there at this point in early 2018. And then again, the indication is, I think it's this one right here. I'm not absolutely sure. I think it possibly might be in this area as well because I think it was in November. So it would have been one of these two indications, most likely the second one here. So in my humble opinion, this one here tended to be a little bit early for my taste. I liked these indications in this area here. And as well, if you watched my recent video, the stock market update on Friday, I think you saw that I was saying that the chart here is a little tighter than it was way back here in early 2018. But I think it's a little bit tighter because I don't think that we're done yet. I think we have more sideways trading, which is going to mean some volatility. And again, here's why is looking at the MAC. MAC is my number one indicator. A nice dish here. We had an attempt move up at this point, and that failed and reflected back down here, but we finally went up and away through here. Now this fast line is moving down here in this area, but I tend to think that we're going to have plenty of sideways trading at least into the next month, into early 2019, before I'm ready to say that the bottom is in and I'm ready to buy. Well, I'm not a trader, and so maybe that's the problem that I have. Maybe I'm just a little too old and that I'm a little too slow. But I like to wait and see things prove themselves out. So here in the histogram, you can see that to me, that low was back here, which was essentially in April, a couple of months after the Bollinger Band indication. Here, I'm not quite sure if we've hit bottom yet, and we will see in the next month or two. Definitely the price rate of change. Here is the Bollinger Band indicating that bottom at that point, but I'm thinking that this is a little bit more valid in my humble opinion. And again, I think we're heading on down this way as well. We got more time. That's what the RSI is telling me, as well as the stochastic. The bottom was in this time frame, and we're attempting to hit a bottom in this time frame. Going on down here and finishing up with the Williams, the bottom there, as opposed to the Bollinger Band indication at that point there. And the Bollinger Band indication might be somewhat consistent with this low in the Williams. Maybe the Williams is a little bit earlier than the Bollinger Band. But heading on back up into the price chart, and it's just a different oscillator, a different measure, and you can take a look at that on real-time stock quotes. You do have the Bollinger Band as one of the oscillators that you can select. I don't normally use it. To me, it's just not one of my primary criteria. I have others that I show you on a consistent basis. So again, for my taste, it's not something that I look at, but you can if you want. So for today, that's ChewDog Charts. Thank you.